Where looks safer in EM to you right now?
Yeah, so I would say, in terms of the relatively safer plays, it would include countries that are less reliant on foreign capital and that have, relative to their own history and relative to other emerging markets, lower reliance on external debt and external capital to fund themselves. So we think, countries like Vietnam, which have pristine balance sheets and very strong external positions, are relatively well positioned in this type of global carry trade unwind, just given their positioning. A market like China, clearly, which has relatively low external debt reliance and very high pool of domestic savings, also would be relatively defensive, as we saw in the China markets, relative performance versus other global capital markets. I think it's also important to think about who the potential winners are of continued yen appreciation. And so there are several companies in emerging markets that compete with Japanese companies that would actually benefit from a stronger yen. So whether it's companies operating across the Korean auto supply chain, including auto parts manufacturers like Hyundai Mobis, which we own in our portfolio, whether it's in the tech sector, clearly, whether it's in other sectors, there are potential beneficiaries from a trade perspective from an appreciating yen. So I think we need to think about both not only the flow drivers, but also the underlying fundamental drivers that create real opportunities in the emerging markets.